Hey everybody, Boris SBK Forrest. Welcome to the weekly technicals for the euro dollar, dollar yen, and pound dollar for the majors, April 29th to May 3rd, 2019. Big story this week is dollar strength at the end of the week. And the big story, of course, into next week will be if US data will confirm the dollar breakout. That's really the big idea. As we came to the end of the week, there was a little bit of a back off trade, especially in dollar yen, as the 112 level really got sold hard, essentially on the assumption that although the GDP numbers were very strong, the underlying data, the consumer, which is really the absolute driving force for the US economy, is simply not there. Consumption spending was very weak this first quarter at 1.2%. And that's a function of the fact that there's really, as I've been saying forever, lots of jobs, but little money. So the whole point of growth in the U.S. economy rests on wage growth at this point. And as we go into this week, that's going to be the big tell. If wage growth begins to pick up, which is essentially going to then translate into retail sales growth, that's going to very much change the mindset of the market, and especially the credit market and the yield market. And if the yield market begins to kind of take the bid that the equity market has seen over the last several months, that will be the combination that drives the dollar really, really higher. So it really all rests on the U.S. on wages, the way the market is going to feel about wage growth, much more important than job growth, and how that's going to translate into hopefully higher yields and a rise in dollar yen, and of course a decline into euro dollar and pound dollar. In the meantime, the interesting thing that happened this week, of course, was that euro dollar broke to fresh yearly lows, and I think even multi-month lows here, as it took out that 111.85 level. That's been holding for 3 times, and I guess 4th time was the charm, where the bears were finally able to break below that level. Although it did pop back up on Friday, it was ultimately sort of a weak pop-up. In a sense, when you're looking at the levels now in the euro dollar, the levels have shifted markedly to the downside. It's now a 110 112 trade, whereas before it really was a 112 114 trade for many, many weeks, as it's been range bound to that. We've made fresh lows. We've now opened up the possibility of this new range trading, and of course the shorts are going to just eye that 110 level with all the power of sharks looking for blood in the water, because that is going to be, I think, the key defense level that the longs are going to try and hold. In the meantime, of course, that 111 level got broken, and I have a feeling probably is going to get tested back down to the downside as the week progresses. Dollar yen, on the other hand, very much a yield play. The 112 has been a trap for longs already 4 or 5 times in a row, and the critical question here is, can we bust out unequivocally? We do have lots and lots of data this week on the U.S. side, which culminates, of course, on Friday with the non-farm payrolls, and that's going to be the absolute key data set. If wages can essentially propel the dollar, the U.S. yield story, everything is going to change. Ahead of that, of course, we also have the FOMC meeting, which we'll get into in just one second. And then finally, pound has actually been a relative strength trade. We do have a major event this week with the BOE. It'll be interesting to see how they spin the whole thing after the post-Brexit sort of calmness that we have in the markets at this point. Now, on the economic calendar here, the European side is actually relatively quiet. We have confidence, business climate indicator, nothing much really going on here. The first important data set that we're going to get this week will be the personal income, personal spending. Here, the market is looking for a bump up, and if those numbers can just confirm the survey expectations, that could be positive for dollar as well. Because remember, everything on dollar strength story rests on consumer spending, and we need some evidence of consumer spending. There is plenty of evidence of economic growth spending and job growth creation. None of that matters at this point, because it's really the consumer spend that will then create the possibility for pricing power, which will then create the possibility for inflationary pressures, which will then create the possibility for the Fed actually changing from its neutral position. That's really how the whole chain of events rests, and that's what we're going to be looking at as we go forward. In addition to which, as we go into Tuesday, we have European GDP data, which we're actually bullish the Eurozone because of strong trade data and retail sales numbers that are going on there. But on the other hand, the CPI data remains very bearish. At this point, I think nothing on the European calendar is going to change the position that Europe remains very much the weak link in the whole G3 growth story. Pending home sales should be bullish to the U.S. because the housing numbers have improved a little bit off their bottom, although housing still continues to be the absolute weakest part of the U.S. economy and still a lagging indicator as we go forward. Then into Wednesday, lots and lots of central bank stuff. We have the UK market PMIs, the manufacturing PMIs, which will be interesting to see. We're actually bearish that number. Then we have the US ISM manufacturing and the ADP employment data, all of that great precursors to potentially what the NFPs will be. We don't have the ISM non-manufacturing, which is always the best forecaster of the non-farm payrolls. That comes in afterwards. But in the meantime, those numbers should be actually relatively strong. And we don't have much of an opinion on it because there's lots of offsetting data. But if that comes in strong, that all builds up that whole vortex of positive sentiment. Ultimately, though, we also have the FOMC rate decision and the presser. Now, it's going to be interesting because, the pressure comes in before the non-farm payrolls. And it's going to be interesting to see just how the Fed spins everything. There's been a big rebound in the U.S. economy. It'll be interesting to see if they come out with a more hawkish tilt. In other words, the tilt here will be that we're neutral for now. We remain data dependent, but data is certainly improving, and it's not out of the realm possibility that we could consider a resumption of tightening into the second half of the year. Any kind of rhetoric of that nature, be wildly bullish for the dollar, because then the market really will feel that any improvement in the data will actually change monetary policy. I don't know if they're going to be that hawkish. I think they still want to be relatively cautious, but any sort of a hint that they are not permanently on vacation, any sort of a hint that there is a very much a real possibility that they could resume tightening policy before the end of the year should be dollar positive as we go forward. Then, of course, we also have the Bank of Canada rate decision, the Bank of England rate decision, the BOE rate decision. That should be very interesting because here the conversation will be all about the reaction to the Brexit delay, and more importantly, the fact that UK economy has actually been relatively robust relative to certainly Europe and just generally the expectations of a Brexit slowdown. So within that subset, how will the Bank of England judge the monetary policy outside of the political risks of Brexit? It'll be interesting to see. I mean, I don't think that the Bank of England is going to back off we're not going to do anything until we get a resolution on Brexit story. But if they nod to the fact that UK economy has performed far better than conventional expectations, and that Brexit may not be as existential event if it's negotiated with some sort of moderate amount of compromise, I think you could expect the Bank of England also to tilt hawkish, and that should be positive pound. I am generally leaning much more positive pound than I am negative pound at this point. And then, of course, Friday, everything comes in together. We have the services PMI out of UK. That was very negative last time, but let's see if that bounces back after the Brexit delay relief numbers. And then, of course, we have the marquee event of the week, which is the non-farm payrolls, where the only thing that truly matters will be the average hourly earnings. If those are projected to jump nicely from 10 to 30 basis points, if they go to 30 or 40 basis points, that I think should be the icing, the cherry on the cake that seals the idea of a pro-dollar rally. If it isn't, then that could really disappoint the bulls. Let's take a look at the charts here and just see how everything shapes up. So when you're looking at the charts here, you can see the euro making fresh lows here. We did make this sort of a half-hearted attempt at a rise. We are very stretched from the moving average, so certainly some short covering is possible here. But generally, when you have these kind of sharp moves here, especially the low here, which was what 1109 on the low here, that gets broken. I mean, I think the critical thing here, that the first order of business will be try to take out the 11 handle and move us into the 111, 110 corridor. And then if the non-farm payrolls numbers comes in strong, there's every possibility that we could see euro at 110. So I'll be watching that very carefully. Technically, you see it's essentially a series of lower highs and lower lows. All of this finally now starting to show a downward bias. We've been in a sort of a range bias, and this was the first week where the range bias tilted to the downside, and overall the trend now looks to be to the downside. Cable, as I said, holding bid here. This 129 level, relatively firm here. This is a key thing here. This 128.50, 129 hold would be very very bullish for cable. Cable also very much stretched away from the moving averages. So any kind of a comeback here. There's also this sort of gap fill that we did fill the opening gap, which generally provides us some scope. One negative aspect of cable, of course, this big reversal to the downside, just like on the euro, that it couldn't quite hold. But again, I think cable is going to be the Bank of England story on Wednesday, so be watching it very carefully to see if there's any kind of a post-Brexit relief rhetoric that says we don't see Brexit any longer as an existential threat, and we now may turn our attention back to normal monetary policy. Any kind of rhetoric like that should be super positive, take us right back to 130, maybe even 131, as the market then starts to trade on economic rather than political news. And then finally, of course, here's the yen. Yen looks very negative technically here, but not horrid. I mean, what I mean here is this 112 just certainly got rejected very badly here, and we're kind of holding bit of this 111, 111.50. But overall, it's still a market that is uncertain of the direction. Now, if we start breaking the 111 level, it still doesn't make it horribly negative, but certainly it provides. It's kind of, to me, that's the final support level here. If it takes out 111 convincingly, then I think the story on yen becomes much more of a distribution rather than a downward correction in essentially an uptrend. Right now, we're barely holding underneath the 20-period SMA. The 1100 level really is a key level to hold. Obviously, all of this stuff is going to be driven by yield, which yield actually was very horrible. We came back. Look at the yields. The yield numbers came right back below 2.5. Market just simply not buying the U.S. growth story, and we need the credit markets to buy the U.S. growth story for dollar yen to truly become a run through the 112 level. I will tell you this, though, if we can take out this 1230 with conviction, or if we can take out 1250 with conviction, that leg really opens up the run towards the 114. So that's sort of how the majors are shaping up. There's lots and lots of unique stories all the way through here. Lots of stuff to watch. Should be a very interesting, very exciting week. I wish you guys the best luck, the best trading. Boris Schlossberg, over and out.